Good afternoon, George Cavaligos for HFT Bonds. Well, good way to start off the week. New highs last night and then right back in the range. Another irregular B wave high. Typically the C waves that follow irregular B waves will take out the previous lows. Typically. Let's one step at a time, I guess. We're going to test the previous lows first, I think is what I'm trying to say here. 143.15 in the June bonds and 131.13 in the 10-year notes. We'll see what happens. There's, stumbling blocks all the way down here. The previous lows in the 10-year at 18.5. Previous lows at, well, we're through the previous lows in the bonds already. Friday's low at 143.29, which is the bonds lows right now 143.30. You take out 143.29 and you got more than just a reversal day, which is what we have going right now. You have an outside reversal day, which often marks the end of a bigger move. Reversal days happen all the time. We talk about minor reversal days, meeting the objective. The first objective of the minor reversal day is just matching the previous low. So, that's not a whole lot unless you got some kind of a bounce in between that gives you a target, that you can at least have a decent risk reward at. Outside reversal days are more powerful. They point to a retest of the lows. And the way the markets are failing up here, you look at the bond chart, bonds got up to the previous fourth wave high around, 146 and some change, and now they're drifting off that high. The volume's tailed off quite a bit today, but I think that's partially the end of rollover and the new month beginning here. And I've got to imagine the way the markets have been slowly grinding lower today that people are long, and all we're doing is just squeezing longs out, and there's very few new shorts coming in. Probably people are staring at the non-farm payroll number Friday and going, oh my God, I can't be short bonds in front of non-farm payroll. I can't be short bonds, euro is weak. I can't be short bond stocks are weak. Guys, it's a different world we're in right now. The Fed is trumping everything else. And the way they're throwing money at the markets is just unbelievable. Somebody pointed out the fact that the sequester, cutting out, I think, what was the figure? 10% of the federal budget is $85 billion. That's 1 month of QE from the Fed. That's silly. The Fed's throwing that much money at the markets every month. Every month. Don't fight the Fed. Everybody talks about it. Don't fight the Fed. Well, it depends on where that money's going. It's certainly not going into bonds to the extent that it used to. It's going into equities. It's going into crude oil. It's going into grains. It's going into the mattress. You name it. It's going elsewhere. So far we haven't seen any big selling today. It's just been this kind of slow grind lower where we've kind of fed on sell stops and squeezing out long positions. I'll maintain a short position as long as I see this kind of trade. What I'm looking for, it'll signal the end of this squeeze, is a quick run down that says, okay, there, the longs threw in the towel. They did the old, oh God, get me out trade, right? Get me out, whatever price, just get me out. That's what we're looking for. I personally think we could go retest those lows before we see the get me out trade, but you want to have some kind of a short on. I covered probably a little bit too early here, but we really haven't seen the markets go down much more since we covered around the time of the buyback this morning. Let it bounce. Take a look at the settlement prices from Friday at 131.25 and 144.11. Look for any kind of failures up there overnight or even into this afternoon. Equities look like they're taking a little bit of a breather right now, so maybe they'll calm down. Give some of these day shorts a chance to cover on the treasuries and look for a bounce. Sell rallies, I think through Wednesday, it's probably a good idea, and then we'll see what happens with the Wednesday, Thursday, Friday trade as people prepare for the non-farm payroll numbers. But I think tomorrow, at least, we can probably see lower lows, especially into the early morning. I would really love to see the markets retest those lows tomorrow morning and then cover and call it a day kind of trade. So, I got a little nasty today. My apologies to Jim Iorio. I did not like his long yen trade. The trend is your friend there. You know, we took out the previous highs, but it almost hit an exact C equals A target, and I wish I was still on the trading floor where I could have a long chat with my buddy Jim and say, listen, you know, this is the old Elliott wave trap. The market took out the previous A wave highs, went up and made the C wave almost exactly C equals A on the hourly charts, and now it's coming back off. That tells me that a lot of this corrective move in the yen might be over, or at least the A wave up might be over, because we went up in 3. So now is that ABC complete, and now you're going down to new lows, or is it ABC A, and you're going to go and do some kind of a fib retracement of the rally, maybe test the previous lows, and then bounce again, call that B, and then C, and go to a more longer, protracted corrective trade. Either way, if you did Jim's trade, you did the options trade, you're limited risk, be careful, or maybe just move your stop up. It's 20 yen ticks for the spread that he recommended. It's not that big of a deal. Hell, I took 20 tick risk on my short position that I put on there, and I'm starting to cover some of that as I speak anyway, so I'll see you guys tomorrow. Sorry, Jim. I love you, man. I hope to see you soon.